And we hope
Thank
to
you.
chat very soon. That's the word coming in on the markets. The broader markets are seeing a correction, which is a healthy sign. It's good that perhaps some of the froth is coming off, and it will give retail investors an opportunity to get back in. But let's talk about some spaces that have been doing well lately. Berger Paints, the stock is up 40% this year. And of course, there's this whole unlock theme right now. The economy is picking up once again. So what does this mean in terms of demand? India is recovering from COVID, thankfully. We also have rising crude prices. So how does all of this fit in? Abhijit Roy, the Managing Director and CEO at Berger Paints, joins us now with his view. Abhijit, good morning and thanks for joining us. The last time we chatted with you, I remember you telling us that things have picked up across the board. But where do we stand at right now? How is demand, especially rural demand, semi-urban demand? And what are your forecasts over the next few quarters?
So demand has been pretty good. I think, we started the year pretty well in the month of April. It was solid growth there over even 19. May, of course, was a decline. June, again, we bounced back with strong growth. July, it continued, the growth momentum was very, very strong. August, again, so far things look good. So if this is the trend, then I think, as far as value and volume growths are concerned, we should have strong double-digit growths in the Q2, and going forward, it's the seasonal months for us. So I think that should be good. As far as you mentioned about the crude price, that is something, which had put a pressure on the gross margins in Q1, if you recall. So we have taken a lot of price increases. The last one will come into effect from the 1st of September. So we took it in steps so that, the market doesn't get too disturbed. As of now, as things stands, I think, we are more or less covered for the RM price increase. So profit going into Q3 should be good. Q2, little bit of pressure because, it was taken in steps in July, in August, and in September. So this is the situation.
Okay, Mr. Roy, so can you just let us know what is the quantum of the price hikes? As you said, there have been a bunch of them, and you're saying it's more or less mitigated the raw material impact. So do we see gross margins going back in the 40% plus range? Because the data here tells us that, the high, I think, was around 44%, which was in the Q3 last year. So do you see those levels coming back?
So that was a bit of an aberration because of the unusual price drop in RMs, which is not sustainable, I think, in the long run. But it will be quite close, to the 40% level, which is what what we expect, because of the price increases that we have taken adds up to about 6.5%. Depends on the product mix, and quarterly it changes. So Q3 typically is a rich quarter, because of the seasonal months, and the tangent is the emulsion sales are much higher in the seasonal months. So at that point of time, the mix is much richer. But otherwise, it should be close to those levels in Q3 again.
Okay. Also, you did say strong double-digit demand, but bear with us because it's getting tough to understand normalized run rates. In Q3 and Q4 of last year, obviously, there would have been a lot of pent-up demand. That's why we saw some phenomenal jump, in the volume growth. Q1, again, year-on-year was a low base effect. So therefore, that 90% number again is like an optical illusion. So help us map a regular run rate. Volume growth, when you say double-digit, are we talking low teens, high teens, mid-teens?
Okay, so Q1, of course, as you rightly pointed out, was an aberration because last year there was a major decline, about 48%. So the right way to look at it will be to look at versus 19-20, where are we? And that also, in spite of May, which was a bit of a disaster, we managed to grow at almost near double digit in terms of the volume growth. Though the value growth was lower at that point of time, the price increases had not kicked in. Now, in the Q2, the volume growth will be in the teens. I can't actually tell you, whether it will be mid, high teen or whatever, but it will be in the teens for sure. And in terms of The value growth, obviously, because of the little bit of a price increase effect, which will already be built into quarter two. So that will be higher by about 4 to 5% maybe in terms of the value growth. So volume growth will be in the teens and value growth will be slightly higher than that.
Okay, so volume growth in the teens. What about capex? You had a plan to put 700 crores of capex on board. I think you deferred that because of the whole COVID situation. Are we on track now, and when will it come on stream?
No, we didn't defer. Actually, it got postponed a little bit because of the situation on the ground. So it got delayed in terms of starting. But it's solidly being now worked upon. And the progress is pretty good. So the Lucknow plant, which was the main capex, which we had, is on stream. And instead of coming on stream possibly around February, it will get delayed by a month or two. That's all that is going to happen. And in fact, we have increased the capex from originally planned of about 600 to 650 crores to now about 800 crore plus.
Okay, fair enough. Now, Mr. Roy, we've spoken about the quantitative part of it as well, but just going back to sort of demand trends, we also hear a lot of very positive commentary from the real estate sector and keep talking about fresh launches. So are the growth trends now the start of a fresh expansion cycle, would you say, when we're talking about the decorative paint side?
Well, I don't know whether it is a start of a fresh cycle or not, but there is definitely a little bit of a pent-up demand, because a lot of these were postponed earlier. In the pandemic period, sales had fallen. The commercial properties is still not fully back. The residential part of it, many of these are getting constructed now and finished actually. So that there is a lot of traction there, which we see on the property side. And therefore, the new projects business is also looking up. So that gives us additional a few percentage points in terms of growth. So that's what is happening. We don't know whether this will, sustain for a long period of time. These days, this great term of super cycle, etc. So we don't know whether what happens in the future. But as far as we are concerned, we see the momentum definitely picking up on this side of the business.
Okay. And any kind of trends, change in consumer patterns that you've noticed in the semi-urban or rural areas? Anything on the industrial side that has changed compared to earlier?
So in the semi-urban rural areas, the demand continues. Last year, of course, it was a bit of an aberration because in the COVID period, the cities were badly affected and the semi-urban and rural areas were doing very well. Compared to that, the growth is not as robust as it would have been last year, but it has been more than made up for in the urban centers, which are showing, good growth. But on the other side, on the industrial side, protective coatings, that area where we are stronger, that's doing well. As far as automotive is concerned, we are primarily there in the two-wheelers and commercial vehicles. It's a moderate growth rate, though it is growing, but moderate. In terms of the growth rate, and that's it. So on the industrial side, it's a sort of slightly lower than decorative, I would say. Decorative is growing faster.
Okay, we leave it at that. Thanks a lot for joining us, and thanks for giving us an understanding of which way things are headed. So there's a price increase that the company has taken, which is enough to offset the raw material price inflation, but they will continue to see some amount of margin pressure. But demand trends are quite solid. Mid-teens is what they see in terms of demand growth. Let's take a look at the past financials for Berger Paints. That would be an interesting thing to just map which way it's headed. It's been one of the strongest paint companies. Just look at that, the revenue growth. Pandemic or no pandemic, it's been a solid up move there for the revenues. Next up, we have the margin picture for them, holding on to 17.4%, which is no mean feat considering all the challenges. And lastly, we have the profit after tax coming in as well. That too has been pretty solid, rock solid there between FY20 and FY21. But let's get back to the markets then. It is, of course, very volatile, but the good part is that the mid-cap index is holding for now. The index is up almost about 170 odd points, and the Nifty is also picking up a bit of pace, has moved into the green. A couple of stocks, Sri Renuka is now up almost 5%, so don't lose sight of that. The entire sugar space is once again sort of starting to move on the upside, and many stocks are hitting fresh 52-week highs as we speak, especially in the broader markets. Arvind Fashions, Godrej Consumer, HUL, by the way, is at a fresh 52-week high. Oracle Financial, a couple of others as well in that space looking good. Let's take a quick commercial break on that note.